Hey everyone, this is John Feneck from the Feneck Commodities Report, and with me today is my YouTube partner, Don Durrett, founder of goldstockdata.com, a great source everyone should be checking out in this hot bull market for a lot of equities. And also, we have the CEO with us from Triumph Gold, John Anderson, today. That is TIG in Canada, TIGCF in the States. Welcome, guys.
Thank you very much for having us.
Yeah, of
Yeah,
course.
yeah, I'm looking forward to this, John.
Yep.
Yeah. So, John, why don't you kick it off for us? Give us an 8 to 10 minute overview of Triumph Gold, and then Don and I will ask some questions.
Great. Okay. Triumph Gold is a company that had its flagship property is called the Freegold Mountain Project in the Yukon. It's been around for 140 million years. In the markets, it hasn't been around that long, but I got involved as an investor in 2006. It was the first company that went public after the Yukon government got control of administering its natural resources in 2003. And what was really interesting about the project is it's unique from a standpoint is when you go to an area where there's very little infrastructure, that is your biggest cost prohibitive event, really, as far as developing a project or exploring a project. And this project was put together by a prospector who grew up on the property with his father, done a lot of work on it, but it had infrastructure. It's about 60 kilometers off the Klondike Highway, which connects Alaska to the lower 48. And it also has a government-maintained road that goes to the property and through the majority of the property. And this property was really three big packages that Bill fortuitously put together at the bottom of the market about 25 years ago. But there was a lot of work that was done on it. And what we got out of it is that you had three active placer operations on it. When you've got placer gold operations on it, and these aren't little pan-held, gold guys. These are large-scale placer operations, dredging machines that you would see on TV, on Discovery Channel, for example. There's a source for that. And this area was also very unique that it was the only area in North America during the last ice age 20,000 years ago that had no glaciation. So the soil samples that you would have on surface were indicative of everything down below. And so as a retail investor and owning a gold fund during that period, the numbers and the results that were coming out of this project were phenomenal. They were mind-boggling. They were sometimes more than an ounce per ton, and at $3,300 gold, that's $3,300 rock. And to move rock, it's about $100. So the margin would be incredible, and it was a matter of putting it all together. And the company did a phenomenal job back then finding out different resources. It had found three deposits. One, which was a gold oxide deposit. For a lot of people that don't understand oxide, it's very soft rock. And so when you crush it, and you can process it at a very low cost as opposed to building a big mill. And then a few years later, they found another at the other end of this big copper gold system, or a multi-element soil anomaly, and it does have the largest soil anomaly in North America, was a big copper gold system. So where you find copper, you usually get gold in these big bulk tonnage systems. And so 4 kilometers away, they found one and they started drilling it. And that was creating a lot of excitement. So 2017, 18, 19, the company was drilling. They were spending $5 to $6 million a year with phenomenal results. And if they came out with those results today, if we came with those results today, I think the stock would absolutely do extremely well. They did a 43-101 report on its two deposits, and it was close to 1 million ounce gold equivalent per deposit. But in 2019, when they were drilling this copper gold system, they found two high-grade, you would call feeder zones, breccias. One they called the blue sky zone. And the blue sky zone was higher enriching in copper and gold. It would be then they called it 1.5% copper equivalent, but it was mostly gold. It was 0.75 grams per ton gold over hundreds and hundreds of meters, over 600 meters on one hole. But just a few miles away, kilometers away, they hit another zone called the WOW breccia. And WOW isn't because it was great numbers. It was tungsten hosted. So there was a different geological structure that was feeding the mineralization, and it was tungsten hosted. And of course, a few years ago, 7 years ago, not many people had any interest in tungsten, but the value of the tungsten that we have that now would add significantly to the value of the rock, because again, mining is about moving rock from one place to another. And although some people may say our project is low grade, both the nucleus oxide and the porphyry potential, it's about moving rock from A to B. And when the company first discovered this project and developed it in 2007, 2008, and had those 1 ounce per ton drill holes, when you actually mine the whole thing, because there's mineralization everywhere, you're moving almost all the rock, so you don't have a lot of waste rock. So a lot of investors are going to say, well, it's low grade, but when almost all the rock you're mining is going to make money, you move it, and it's going to be very, very profitable. So that's really, the flagship property. We've also got a polymetallic deposit, which hasn't really been worked on by the company, but it was developed by a company called Placer Dome in the 70s. And then another company joint ventured it off in the early 80s. And it was a higher grade vein system, polymetallic. So we've got 3 different type of systems on it. And it's really a unique project. And it's along that Tatina gold belt. And we're just about 60 kilometers, 40 miles from a 3 billion ton deposit, which is the Casino deposit, which I think people are waiting to see what happens with Western Copper and the Casino deposit, but it's the same block of rocks. It's the same age of rocks. Everything looks the same, but the difference is we've got this other system on the rock outside of the infrastructure where we had a geological event 30 million years ago, which created a lot of high grade. And that's what created a lot of excitement in 2017, 18, 19, when we had Gold Corp, who used to own 20% of the company. Zijin Mining used to own 10% of the company because of the potential of this thing. And that potential hasn't gone away. What we did, as John mentioned in our preamble, 3 years ago when the market fell apart for gold equities, as a big shareholder, and I put a letter out to certain investors that came in and believed in the thesis that we put together, was let's not do anything and dilute. Like, let's do geological work. Let's work on the property, but let's not do that expensive drilling program, because the market wasn't paying for exploration success back then. So why go out and spend money when you're only going to get a small reward in the marketplace for it and dilute yourself? I currently am just under a 10% shareholder. I've got a great share structure where I've got some investors out of Europe. A gentleman named Michael Gentili owns like 8% of the company. Gold 2000 owns about 8%. Merckman owns about the same. A Norwegian pension fund and a Copenhagen, Danish pension fund out of Copenhagen, they own almost the same. So we all bought into the system, and let's wait for the market. And we think the market is prime for the Freegold Mountain Project. But in the meantime, I decided to take the opportunity to acquire a silver project in in Utah that came up. And it's an old, small producer, had some geological work on it, and it's a very high-grade silver. And it's something that, I wanted some, great exposure to silver, because I'm a commodity a study of commodities, and I really think we're going into a rip-roaring commodities market, gold, but also silver, and we don't have much exposure in silver. So I wanted something that was pure silver in the United States, great infrastructure, and we found that project in Utah. So we've announced the deal. We haven't really promoted it, but it is a project that we own. It's got, I won't say it's brown fields. It would still be considered green fields, but it has historical drilling of 32 drill holes on it. It's got a big bulk sample that was taken out of it, but very, very high grade, upwards of 45 ounces of silver a ton. And with silver at $39, $38, it's very, very attractive. And it also had about 0.125 ounces silver. So again, you're over $2,000 rock that we're looking at moving. So That's what Triumph is. We've been very quiet in the last 3 years. And now, because I think the market is here and we've got projects that used to have a big market cap in 2017, 18, 19, I don't think it's going to be very difficult to get there, because a unique thing about this company is that although we've spent $52 million in the Yukon, our market cap was always trading, $60, $80 million in 2017, 18, 19. I think we're going to get that back to that valuation just on what we have, let alone when we start working at it.
Great. Thanks, John. I'll start off with a few questions, and then I'll turn it over to Don. I wanted to start off with a comment because a lot of my clients know me for critical minerals. I got into tungsten and antimony about 2.5, 3 years ago, a little ahead of the crowd. And when we look at our tungsten holdings, Fireweed, is one in Canada. I'm not sure how close it is to you, but it got a $35 million check in December of last year, and the stock barely moved. It was during tax law season. It was very quiet, and we were like writing to people, "This is crazy. Like, this is a really big deal because they don't, this is free money." And the governments, whether it's Canadian or US, are starting to recognize that China owns 81% of tungsten in the ground, and they're not going to play nice in the sandbox. In fact, they've already said January 1st of 2026 that they're not exporting it anymore. So like that was like we found this out in 2023, 2020, early 2024, that they were playing this kind of a game. And so we started to load up on positions like Fireweed. We also loaded up in late 2023 in Guardian Metal, which you and I have talked about, John, GMTLF. We started that position at 17 cents. It's trading at 78 cents now. It's been a home run for us. It's actually our largest equity position right now in full disclosure, because they just got a $6.2 million check from the US government in Nevada. And they raised $21 million on the back of that announcement through 3 institutions. So it's like, this is really, really big for you, I think, at Triumph, that you're getting a better understanding of your tungsten in the Yukon. You mentioned it's the WOW deposit. Could you give us a little bit more color around like how much tungsten you may have and whether or not that would be factored into a report in 2026?
We do have a report on it. It is about 15 million pounds that we've got at the start, but we weren't analyzing the tungsten. We weren't looking for it. Again, we've got the largest multi-element soil anomaly at surface. And we started off looking at the gold oxide, then we went with the copper gold porphyry, and it was truly by luck that we found the tungsten in the wild breccia. And so we want to go back and explore that. But as you mentioned, Fireweed is in the Yukon, but 2 of the richest deposits of tungsten in the world are in the Yukon. And that is the Cantung mine that I was involved in financing it when it came back into production in the early 2000s, and the Mactung mine. And there's a town called Tungsten in the Yukon. And it's because it was the tungsten supply for North America, the highest grade tungsten supply. So although I can't go out and say we've got a pure tungsten play right now, but we've got, good little kickers in tungsten, but we weren't looking for it. And underneath that multi-element soil anomaly, believe me, we're looking at it right now.
Yeah. I mean, the price of tungsten just hit an all-time high 1 business day ago. So this is something that investors should be aware of. We've been saying this for like 2-3 years to our investors. Like, you have to be watching charts of some of these critical minerals because they can be very additive to projects. Don and I were just talking about Aftermath Silver, about a week ago, and they came out with their manganese report February of 2024, stating that, we have 99.9% battery grade manganese, and it added a lot to the project. And that was around 35 cents US. The stock's around 62 cents now. And Eric Sprott came in for $15 million last fall because of the manganese, not necessarily because of the silver and the copper. Like, he was very impressed with how much that would add to the value of the project. So I would suggest to Triumph to continue to, let the market know about your tungsten. It's very valuable, in the scheme of things. Let's talk also about your silver deposit in Utah, because I'm a big fan of U.S.-based projects, with Trump in his EO in March talking up the U.S. and then following that up and doubling down in April. How did you acquire this, and for how much?
I'm very much a gold person. I understand its role in society. And you'd hear these silver bugs talk about silver all the time. And it wasn't until November last year when I was in Hong Kong and I got to meet someone in Hong Kong whose friend worked for the Chinese government and said they're the largest supplier or owner of silver in the world. And I go, you don't really hear that. But it's all through the credits that they get off of processing other countries' ores. And then they take that residual ore that they get 20, 30% return on because gold and copper are the primary assets, typically are lead, silver, zinc, whatever the smelter is. But then they take it and move it elsewhere. And they told me how much they had. And I was like, I was amazed. And they said that's about a 3-year supply, what they need for their industrial use only, not for marketing, not for financing, not for their balance sheet, just for what they need. It's like, so these silver bugs are real. They're right. And so an opportunity came up with some friends that had sold a project to a Cisco in Utah and sold it for a couple $100 million when they didn't really know what they had. And through the process, they got some of that land back. And in that land, they had two mining claims, a gold and a silver. And they told me that it had been privately owned or had worked on by private people for years, but no one that actually took a real shot at it. It had had some small scale production in the past, but it wasn't until 2016 and then 2018 where there was some drilling that was done on it. So on this property package that's 80 miles south of Bingham Canyon, 40 miles south of Eureka, right off the highway, there's this project. And they drilled 32 drill holes on it. And these people could only drill vertical holes. They didn't drill diagonally and do any aeromagnetics, but every hole hit. And then 2018, the owners had done a 12-ton bulk sample. So a bulk sample is where you take rock and you actually process it. So you had 12 tons of rock. And the average grade was 45 ounces of silver with 0.125 gold, which confirms exactly what was above one of the drill holes. The hit was even better. So we took that opportunity. We, again, they're friends. They're taking Triumph Gold shares. I paid $150,000 US for it, and I'm giving them a million shares per year for the next 4 years with a balloon payment, $1 million in stock or paper in 4 or 5 years, 4 years. But we're very confident about this project. And there aren't many places, in the United States where you have a high-grade silver mine or a silver deposit. And Utah, everything is a cycle. And Utah is one of the best mining jurisdictions, if not the best, according to the Fraser Institute, for mining in the world, let alone in the United States.
Fantastic. Thanks for that answer. And great job on that negotiation. I'm sure they are friends for that price. The other question
rock, paper, scissors goes a long way.
There you go. I was going to mention about the Yukon, and I don't mean to bring up something negative, but it needs to get brought up, right? Because Victoria Gold in the early part of this year disappointed the market. I think personally, some of the stocks in the Yukon region have been unfairly tarnished as a result of that. What's your opinion of that, and how far away are you from Victoria?
We're a couple hundred miles away from it. Okay. Driving it's a lot different. Our project is, again, it's only 40 miles from the 3 billion ton or 4 billion if you use inferred Western Copper's casino deposit. The biggest delay in the Yukon has been lack of infrastructure. We got the infrastructure, but then it's also been power. They don't have enough power. But with British Columbia, which is just 80 miles south, depending where you are, or adjacent to Yukon, they've got the Site C dam that's now providing power to the Yukon, and that's going to be, I think, the big game changer. All the other projects are a lot more remote. We have that infrastructure. I do admit that the Yukon took a black eye. Everyone in the Yukon took a black eye because of, the unfortunate thing that happened with Victoria. But I think, whoever takes over Victoria, I think it goes, the receivership is closing the books later this month. I think that'll open up again. But yeah, we did take a black eye. Everyone else did. And I think, 1 quarter, 2 quarters, 3 quarters, things realize that's a one-off event.
Right. Okay, great. Well, I'll turn it over to Don.
Hey, John. I'm a speculator. I don't invest in gold and silver mining stocks for annual returns or 50% return. I do this for the big alpha. And the way that I do that is I look into the future. So I don't care about the next 12 months. If I don't care about the next 12 months, I sure don't care about the current price of gold. So when I look at your project, it's currently valued at $10 an ounce in the ground. And I use 2 rules for exploration stocks. So the first rule is you want to buy a company that has a discovery, and it's early in the discovery stage and it's early in the Lassonde curve. You don't want to be buying exploration plays that are well up the Lassonde curve because your upside isn't there. We're talking about pure exploration companies. So that's rule number 1. But rule number 2 is where you fit in, and that's where you can buy gold or silver in the ground for pennies on the dollar, and it's like printing money if you're patient. It's just a matter of when your company sells. But the key to it, there's 3 kind of keys. Number 1, has to be a significant deposit, right? You're 1.5 million ounces of gold at 0.55, and then 2 million ounces of gold equivalent. So you meet that size. So basically, you are big enough to build a mine. And the second one is location, and your location I think is excellent. You have some infrastructure challenge, but I'm very bullish. The Yukon. I think the Yukon is going to be one big mining district once gold prices get high enough and enough money comes into the sector. You mentioned earlier that this sector is kind of dead. It still is to a certain extent. It's still not easy to raise money for a company of your size, which I think you're aware of. It's not real easy. I mean, your valuation, $15 million, is kind of ridiculous. That's why you valued at $10 an ounce in the ground. If somebody bought your property and started drilling it, I think you said you already put $50 million into it.
52.
So you're losing money on every dollar you drill, right? So it doesn't make any sense. So from an optionality standpoint, my first question for you is kind of your insiders are very strong. I don't know if I mentioned that. That's kind of a very important one for my optionality play. If a company doesn't have strong insiders, then it's too much risk. But you mentioned 42%. I have your company at 35% insiders. You mentioned 42. I did the math on what you said. But so 35 to 40% insiders. So you guys aren't going, you're not going to give this property away. You've been in this since 2006. There's no way you're going to sell this thing. So what kind of minimum number, if somebody makes a call, what kind of a minimum number would you sell this for? And what's kind of your upper? Do you have an upper one as well?
No, I do, and I'd be laughed at if I told you that. But you look, book value is 52 million. Twice book value minimum. We've had those discussions already. I said we didn't do any work, and I should correct myself. We did a lot of work in the last couple of years. We just didn't do the expensive drilling. We've taken Marty and our technical team they've been on site. They've done a lot of work. When you have that infrastructure, you can go and you don't have to helicopter and prospect the ground. You can drive right there. We've got 5 really good high-grade oxide deposit or projects, targets that we want to drill. We want to go and drill deep the porphyry. We've got the permit to do another 1,100 drill holes. You hear a lot of these companies in British Columbia trying to get a permit for 3 holes. We've already got the permit for 1,100. So we know there's going to be a lot of movement on that property. But in Utah when you talk to Lassonde curve, we're treating this as a grassroots exploration project where you've got some cheating data. We know we're very confident we're going to be successful on this project. So we're giving the best of both worlds where you've got a base resource that we think we can, and I truly, in my opinion, more than double or triple that resource with very minimal effort. And then we've got the silver project that is a new discovery. And then we're not even talking about a project in British Columbia that we're actually on site right now. Andalusite Peak, that's 20 miles away from Dease Lake, right in that porphyry, potential. And on that project, we've never promoted it, but we're doing some follow-up on work because every sample that we took on that property would carry, over 0.5%, 2%, upwards of 70% copper. So we're trying to give the best of both worlds, but on a very cost-effective basis. But I'm acting as an owner, and my co-investors that came in every financing are acting the same way. Let's not dilute. I won't mention other companies that have gone out and done a phenomenal job in the Yukon, going from 2 million ounces to 7 million ounces. But the share cap has gone from, 40 million to 350, 400 million. I'm not like that. I'm waiting for the right opportunity because I want co-investors that are like-minded with mine.
Right. Well, it completely destroys your investment. The reason why you own 10% of the company. I mean, if you own, you personally own 10% of the company. So you're in lockstep with shareholders, because if you dilute yourself into the ground, you're just shooting yourself in the foot. That's the reason why insiders are so important, because it makes you to be aligned with shareholders. So I did the math on it. So if you sold it 2 times book, that would be 104 million. That would be a 7-bagger versus 15 million. But then I always take 30% off for dilution. So you take 30% off, you're still a 5-bagger. So as long as you can get the rest of the insiders aligned with you, I don't think you'll dilute more than 30%. So you're a minimum 5-bagger. So like I said, you just sit back and wait. It's like free money. So from a valuation standpoint, I want to start there. So from a valuation standpoint, it looks great if you don't add another ounce. If you don't add another ounce, it's still a 5-bagger. Now, it's going to be one of those rising tides lifts all boats things. So your company doesn't really need to do a lot. All you have to do is sit back and wait and for the tide to go up. You need to have M&A deals. Once there's a few M&A deals done at $50 an ounce, then your company goes from 15 to 50. Then once a few deals are done at 75. So that's all you have to do. It's kind of like when you sell your house, the house across the street. Now you know what your house is worth. It's going to be
I appreciate you saying that, Don, but that's just on the Freegold Mountain Project. That doesn't include.
I haven't got to the blue sky yet, but we'll get there.
So my strategy is put the silver project in, which we now own, drill it, create excitement, and spin it off into the U.S. for the investors.
Well, wait a minute. Whoa. Let me fill you in on how valuable silver is before you start talking about this. Every 1 million ounces of silver production is worth $500 million. Every 1 million ounces of production. So all you need to do is find 5 million tons of ore. 5 million tons of ore at 150 grams gives you 25 million ounces. If you have 25 million ounces, you can mine 1 million ounces all day long for a year. So all you need is 5 million tons. That's kind of a minimum. If you can find 5 million tons at 150 grams, so sometimes 3 million ounces is all you need for a $500 million valuation. So if your company's valued at $15 million, and I'm telling you that if that project can find 3 to 5 million tons of ore that's at 150 grams, it's worth $500 million. Now, where does that $500 million come from? It comes from $100 silver. So if you believe, like I do, that we're going to go to $5,000 gold, all you do is sort of 50 GSR, which is conservative, you get the $100 silver. So at $100 silver, if your all-in cost is $50, which I think is easily done, you have $50 million annually of free cash flow. You put a 10 multiple on that, you get $500 million. So every $1 million of silver production is worth $500 million. So you don't want to spin it out under that scenario. So you want to basically mine it. You want to mine it.
Why I was saying spinning it out, it's an American asset. Spin it out on the U.S. listing, but for the shareholders. Not for John Anderson.
But I've only seen one to one. I've been doing this for over 20 years. I've only seen one time where a company did a 1-to-1 spin out, and it was a beautiful thing. And when it happened, I'm like, well, I hope this is the norm, but nobody's ever done it since. So most spin outs are 30%. So I'm not really excited. I mean, I'm a shareholder in Triumph, but if I get 30% of the silver company, it's like, it's not really exciting. And I doubt you're going to do a 50% spin out. I haven't seen any of those either. So your upside on that silver mine, if you find 3 million tons averaging 150, you got a winner. You don't need very much.
You're right.
Because the silver price is going to $100. So let's go back to Freegold Mountain. So are there any NSRs on the project?
There was a 3% NSR, and it could be bought back for 2% could be bought back for $1 million. We bought back 2% on 3/4 of the property a few years ago for $50,000. The people that had that NSR, they didn't even know what an NSR was. They owned a diaper company out of Australia. They bought through an RTO years ago. So we're good on that front.
What percent of the deposit is oxides?
Right now, I believe just over half of nucleus is oxide. But again, in the last couple of years, what we did is we did all these studies, and we have a very defined oxide sulfide layer nucleus. And the idea, instead of going out and drilling diamond drill holes, is Marty, our geologist, and our former geologist, Brian May, came up with a concept that let's just get an RC drill. And, I'm not know if I can legally say this, but we think we can come up with a multiple for sure for about $2 million of RC drilling. Just drill until you hit sulfide, go. And we've been able to identify that oxide sulfide, but we found other oxide areas. And that's the difference between like the Eagle mine that Victoria had. We do have mixed oxide sulfide, but we have pure oxide, and we've been able to identify that. So that would be a cheap way of doing it as well. And I think you would come up with a multiple to the resource pretty quickly.
Right. Now we come to the most important question. What is the company's plans for the next 3 years?
Good question. So the first thing we've done this year is we went back to Andalusite Peak. We're not in the Golden Triangle. I think, Don, you're astute enough to realize that is a great promotion that Ron Nolensky put together years ago. It's the whole Western Cordillera that comes from Alaska all the way down and goes into BC and Washington and Oregon. We're right along that trend. We're close to the Red Chris mine. So when it was staked in 2018, visited in 2019, 20, nothing was done on it. But we got those samples back, and the copper samples are phenomenal on this. So that's the first thing we're doing. Second thing we're going to be doing is drilling and doing exploration work in Utah, because silver's hot, it's easy. It's also we can actually hit the market rate with this thing. At 12 months of the year, you can drill there. So that's the big thing. And then I think by next year, we will go and start doing some work on the oxide concept, but also follow up in the what's called the WOW zone in that copper gold porphyry system. Don't forget, which you may remember, but your investors, listeners may not, is in 2018, 19, 20, we were drilling 600-700 meter holes and hitting 1.5% copper equivalent. But it was mainly gold. It was wrong to call it gold equivalent. It was, typical BC copper porphyry systems, 0.3% copper, but it was 0.75 gold. If we came out with 400 or 500 meters of that today, I think the stock would go crazy. But as you mentioned, the Lassonde curve, it looks like it's a development. It's still an exploration project. And then we've got this Tinta, which is a polymetallic, small in resource grade, but I mentioned earlier on that Placer Dome had it in the 70s, and then Consolidated Silver Tusk Mines did a project in 81 to do a feasibility study. They built 2 adits into the side of the hill underneath the resource that we have. They went 500 meters and found a vein that was over 1.1 kilometers long, carrying 1 ounce per ton. Under the Small Minings Act, 200 ton a day, they were going to have a less than 1 year payback with a 9-year mine life. The company's never followed up on that. So that's my pet project, is I want to open up those adits and retest those numbers, because where else do you get underneath a resource like that, 1 ounce per ton material? And the feasibility work that was done back in the late 70s, early 80s would be still valid today. The numbers, the cost numbers would be wrong, but the rock hasn't changed. It didn't get up and go away. And 1 ounce per ton is 1 ounce per ton.
So you did a PEA back in 2013. You didn't mention any scoping studies, another PEA. You didn't mention permits. Can you talk about both of those?
Yeah, so the company back then, it had we talk about a 2 million ounce gold equivalent resource now. Back then, it was based off a 5 million ounce gold equivalent resource. And the company did a PEA. That was when gold, I think, was $1,250, copper was $220, and it had an NPV of 650 million. No tungsten, no silver. It was just based off of that. Obviously, 2013, that was 2 years after the peak of the last gold, and silver price. But that's when gold was at 1,900 and silver was at 50 and came down. That's when the company capitulated. Taking that current 2 million ounce that was, redone and taking it by the 5, that is a goal that I have for sure. I think commodity prices are going to help a lot with that. But the company did a lot of baseline studies, preliminary environmental. I want to make it very clear, Don, this is not a project that, and I have to be brutally honest, this is not something that we're going to put into production. I think Tinta we could. I think Utah for sure we could put into production if we come up with 5 million tons. The Freegold Mountain Project is a big company project, and they're very rare, and it's got infrastructure, and it's got, it's on the right side of the border where, the First Nations are very friendly, and they've worked on our property. They're the same group as the Minto mine. It's got everything lined up, and again, I think timing is perfect for the Freegold Mountain Project.
Yeah, we've always approached this as you're an exploration play. That's why I mentioned my 2 rules earlier. So I kind of mixed apples and oranges when I talked about building the silver mine, because I get it. Your gold project is a pure exploration play. So how long do you think it would take, if it wasn't you or it could be somebody that acquired you, how long would it take to permit this project?
I think it'd be a lot faster than a lot of the other ones. I think it could be done in 2 to 3 years.
Wow. That is a big selling point. I mean, if you could permit this project in less than 3 years, because when gold prices go higher, if you will, everybody's going to be looking for projects like this. There's not going to be that many. Everybody's going to want to grow. Everyone's going to be looking for adding production, adding ounces. So that's a big selling point. You should actually use that selling point on your company presentation.
I appreciate the feedback on that, because it's, because we've been so lean and mean, it's basically been 4 of us in the company.
Yeah, I would push the permitting, and I'd also push the oxides. I mean, if you truly are 50% oxides, this thing has a really fast payback. Mm-hmm. Basically, you're going to mine all the oxides first, so they're going to have a really nice ASIC. So you're going to have, potentially $2,000 margins. We're at about $1,200 margins right now. I think I see them going to 2,000. I really do. I think gold's going to really outperform here the next 2 years. I think we're going to see $2,000 margins. So you can imagine if you have $2,000 margins, what the payback's going to be on an oxide project like this. It's going to be like a 2-year payback. You mentioned earlier that they had that massive NPV. I'd really like to see the PEA. So where are you going to get the money to drill Freegold Mountain and this silver project? By the way, the silver project hasn't closed yet. You don't own it yet, do you?
We've just got one final payment to make, BLM payments, which is minor, and issue 1 million shares. That's it.
Right. So how are you going to pay for the drilling for the next 2 years? How much money you need?
I think we'll need for next year, we're looking at about a $2.5 million US program on it. And I'm not shy about being able to raise money.
10% dilution would be 1.5. So it's about 20.
My strategy, I never dilute more than 15 to 20% at any one time.
It's pretty rare a company of your size dilutes more than 20%, but 20% is painful. 20% with a half warrant is painful. Would you do a full warrant?
I'm not even talking financing right now.
Okay, but historically, I mean, you've been open to full warrants, or your board basically says we don't want to do full warrants?
We've done half warrants the last 2 financings.
Excellent. Yeah, I'm okay with that. I really don't like fulls. Fulls are painful for shareholders. You're in alignment. Yeah, I wouldn't go over 15%.
It depends who your investors are. So just, I want to make that clear. Like, we did a financing 2.5 years ago with a half warrant, and we only had 250,000 shares exercised, and it was only 200,000 in the last couple of months. Before that, nothing. And the stock went from 13 cents to 40 cents a year and a half ago. So we have strong shareholders, very strong shareholders. And I'm very creative. I'm sure I could get a lot of those warrants exercised without doing an equity financing.
If you're creative, John, what I would suggest is taking a look at what we talked about earlier in the conversation about fireweed. They got a DOD check, DOE, like that. That's an option if the tungsten that you have on the property is all that, right? That's 35 million Canadian. And it took a while, but they started to promote that in Q1 of this year. And you could see the stock went from $1.05 US to over $2 briefly, on some promotion, just letting the market know, hey, we're not needing to raise all this capital because we have this, asset. Look at Guardian GMTLF. They didn't just get a $6.2 million check, which was non-dilutive. They then got $21 million in financing concurrently, and they got that from 3 institutions. And yes, that adds to the share count, but they are a junior now in Nevada with 2 major tungsten projects completely cashed up. Like, that's major. And their market cap, huh?
Have they drilled it yet?
They've drilled a little bit, but I'm just saying, like, they haven't drilled much at all. But now they've got 27 million plus with it. What people don't understand is when you get the DOD or DOE on your side, now you open the door to other government funding. And that's what Oliver's strategy at GMTLF was. Let me just get something, and then I've got all this other stuff that I can negotiate down the pike, right? But all of that's non-dilutive to shareholders. So I'll finish with this thought. So American Tungsten, just DEMRF, they just announced a $2.5 million financing. Well, they upsized it to 7 like in a heartbeat. Why? Because there's so much demand. So now that stock is popping. It went from 35 cents US to 77 cents close today. I mean, this is real, right? Like, this is the market telling you there is no tungsten out there and the price keeps accelerating. So I would say the WOW deposit, when you gave us your timeline, I would accelerate that portion of your timeline to really start focusing on that. Talk to investors more about that at conferences, in your presentation deck, et cetera.
I appreciate that. I take any advice from anyone on this. And at the end of the day, as much as we're in the junior mining, we've got assets. We are also on the marketing side, because without money and without loyal shareholders and supportive shareholders, we're just a piece of rock in the middle of nowhere. Very valuable rock, but it would kill me if 20 years from now someone else made $1 billion on it and we didn't. And so we're committed to do that now.
One piece of advice I would give you on financings is what basically upsets investors, if you will. What is the threshold? And a lot of companies don't realizes that they don't care. But basically, the threshold is about 10% at a half warrant. As long as you stay below that, investors aren't really going to get angry at you, and your share prices aren't going to crash. For instance, if you do a 10% at a half warrant, and your company's undervalued, you probably only go down 5%. Whereas if you do a 15% with a full warrant, you'll go down 15%.
Right.
So
you got to be in the end. Every time we've done a financing, the stock's been going up. But the one thing I do want to clear up on this, gentlemen, is that in Canada, a lot of companies do flow-through financings, which are tax deferral instruments. And the last thing I want is some tax deferred investor that doesn't give a rat's ass about mining our project ourselves. So I will never do a straight flow through.
So my point is that if you kind of know what the threshold is, you just mentioned, the last couple of financings, your share prices haven't gone down. So as long as you don't upset your shareholders, you can raise money without a problem. I mean, if you're just adding additional shareholders and your share price isn't dropping, that's great, right? So you got to figure out what that threshold is, but try not to kind of poke the bear too much. I see this a lot where companies they basically take as much as the market will give them. They actually flat out say it too. They basically say, "Well, this is what the market will give me." Don't take what the market will give you, because that'll end up damaging your company, basically.
Don, I think if you look at the history of this company since I took it over in 2021, 2022, no one was putting money into this thing. I was personally paying all the bills, every single bill. And I was not going to do a financing till the market turned around. And I had co-investors to come in and saying, let's go do this. So we know what the asset's worth. We don't know what it's really potentially worth, but we know it's worth multiples of what it is.
Right. We know the minimum. You told me 104 million. And I think that's a really good minimum. You're right. The upside from there, it only gets better. So it kind of fits when I first started questioning you, I talked about chasing alpha, right? So for me, you're like a 5 to 10 bagger, depending on how the company evolves, if you will. So you fit in my optionality list, but I'll end it there. I want to thank you for coming on. I think people enjoyed this conversation.
Great. I appreciate it, Don and John. I really appreciate you inviting me.
Of course. Yeah. Thank you, John. Again, this is John Anderson with Triumph Gold, TIGCF in the States, TIG in Canada. In full disclosure, both Don and I are shareholders, and we'll be probably adding to our position as time goes on here in 2025. Thanks a lot, John. We appreciate the overview, but also the honest kind of back and forth here as we move into some Q&A for our listeners. So thanks for coming on. Don and I are going to summarize now, and we'll see you again soon.
Cheers, guys. Thanks a lot.
So Don, well, I'll start with you and just give you the floor to kind of give your assessment here.
Well, I've actually owned this stock since 2011. I've added to it. I actually added to it recently because as an optionality play, my valuation was actually spot on. I mean, he pretty much said that this thing looks like a minimum 5 bagger, which is kind of how I value it. I think the project's going to get bigger. I've always thought Freegold Mountain is a bigger deposit than their current resources. Their current resources are 1.5 million ounces at 0.55 grams per ton, but at oxides, that's very, very economic. For oxides, it's not a problem. And right. 2 million ounces, so they have base metal offsets, 2 million ounces equivalent. So 25% of the revenue will be base metals, which makes the gold project more economic. So you got oxides with offsets. I think the AISC today would be under 1,500. So I think it's a pretty strong mine, which I think is going to get bigger. So I like it. But the negative here, the red flag here is it's going to take them some time to drill this thing and get it bigger. They're not going to be able to raise a ton of money. He's talking about $2.5 million. That's not in the Yukon, so they're not going to poke a lot of holes. We're going to have to get lucky there. It's going to take time, 2 to 3 years. But as gold prices go up, that rising tide is going to kick into gear. Like it's valued at $10 an ounce right now. It's not going to take much for this thing to go to 20 and then double again. So you're going to get I think you're going to get a three bagger fairly quickly. That's what happens when you double and you double again. And then, you hold it. But this is a long-term bet. This is one of those ones you just got to grab and wait to get paid kind of thing. But I like optionality plays like this. The risk reward is really compelling. I mean, the chance of you not getting a three bagger here is pretty low. It's just a matter of when you get paid, how patient you are, how long you want to hold it. Now, the key, of course, this is the key to all gold and silver mining stocks, is the price of gold and silver, right? We're betting on gold prices going higher. If you're not a fan, you're not a big believer in higher gold prices, substantially high gold prices, then you don't want to, be in this game, if you will.
Right.
Yeah. So I'll let you talk now.
Sure. Yeah. I mean, I would agree with everything you just said, with the exception of the gold piece at the end, because this is gold, silver, and tungsten right now, minimum. Plus, he's got the polymetallic deposit, which we don't even know what that's comprised of. We didn't get into that. But I did the math on pre-call. This tungsten alone, with the grade they have, with the tonnage they have, if they did a PEA today, this stock would go berserk, I think, because people don't understand what it's worth. They didn't include any of the tungsten in 2013. All that was a look at the Yukon project, the Freegold project, and they said, if I'm not mistaken here, 650 million NPV. Like this is well over $1 billion at today's prices just on their old report. But now you're looking at adding tungsten. Oh my gosh! Like this thing is. That's why we've been adding to it on any weakness here, because when we saw they did a raise in 2025, that's how I met John, was just 6 months ago. Like I said, hey, tell me a little bit more about the project. And what got my attention was that he mothballed this for the last 3 years. Go ahead, Don.
Yeah. Do you have an idea on how much value the tungsten adds per ton?
I don't, not specific numbers, but I know that in doing the math on what he told me his geo, was looking at, like, there might be over $1 billion of U.S. value right there.
Wow.
Like, it's crazy. The tungsten price just hit an all-time high on Friday, August 8th. I mean, like, we're recording this one business day later.
Yeah, tungsten's valuable. I mean, scrap yards, tungsten's like one of their best sellers, if you will, for profit. It's tungsten. It's a valuable metal, that's for sure.
Yeah, what got me interested is like I come from a background. My dad was a Marine, and I like military metals, and so I looked at that as an investment in 2023 into 2024. Then Morgan Stanley started to get into the antimony thing in 2023. That got my attention with stocks we've talked about before, like Perpetua. But now it's like you're starting to see weird stuff happen in our market, Don, with the three stocks I mentioned getting big checks, right? These are not huge companies. I mean, Fireweed's got a bit bigger cap, but then you look at like USAS, which you and I talked about at least twice in the last month. I mean, these guys got $100 million check, but it wasn't just like on their gold and silver. They have 90% antimony on the project now. And so like it's transformational to have some critical minerals elements into your story. I think these days it adds a lot. There are some promoters out there that are promoting crap, right? Like they always do. That particular portion of the deposit isn't real. It isn't that large. So you have to do your homework. But this could add a lot of value. And the best part about Triumph Gold is that the valuation is already so low, right? It's like not like we're asking you to look at a story that's up 700% year to date. This thing hasn't barely moved. And so like this is what gets us excited as value investors.
Yeah, absolutely.
So Don, you want to pivot into macro since we couldn't talk macro on the front end?
Yeah, let's do that. You go.
Okay. So, obviously we've got CPI tomorrow. That's going to be a big number. We've got a 2.8% estimate on a 2.7% previous read. Do you think the tariffs are going to be factored in at all to that number tomorrow? I don't think that's going to be too much of an impact, or do you disagree?
It's hard to say. I think a little bit, but I still think that the tariffs are going to create inflation. I do. I think that 15% average is going to have flow through to the consumer. That the thing is the overall average. I don't know what it's going to do, but there's going to be price increases. There's no doubt about it, and a 15%, especially on autos. Autos is going to be a big hit. When you throw a 15% tariff on all the cars from Asia and Europe, that's a big hit. So we're going to see that. Now, services in the U.S., which is a big chunk that we spend, I think services is a lot higher than the CPI says. I think services are at least 5%. Because services, they can pass through cost if they want to. So I think, and we're seeing this, right? For insurance cost, you got to get your car fixed, all these things, plumbers, anything like that. All those services are skyrocketing. So we're not getting 2%, 2% inflation on services. It's not happening. We're seeing substantial increases. Somebody told me that they had their house, they did a remodeling, and he was shocked at the cost. And that's all services. It's a combination, right? The services is the fee that they're charging, but also, what they have to pay for the parts and labor. But by and large, it was a lot higher than expected. So I think we're seeing inflation a lot higher than these CPI numbers. 2.5%, and they're basically saying inflation, is 2.5%. I don't believe it. I don't buy it. And I think these tariffs are going to continue to put upward pressure on prices. Let's put it that way, where, you go to buy something and you're a little surprised by the price. One thing that we know is that the U.S. doesn't make anything. So we don't make anything, and Trump pretty much put a 10% minimum, and the average is 15. So if we don't make anything, if you go to buy something, you're gonna pay more for it. I mean, that's the bottom line. These things are not going to stay the same prices. So the stuff we buy go up, and services are going to go up, and the cost of living is biting people. I was listening to Michael Pinto over the weekend, and he said that 60% of the U.S., consumers or families has either zero wealth or negative wealth. And I think that number is probably accurate.
It's hard to, I mean, I would be interested in his source on that. I mean, I think people are wealthier now than they were for sure, like in 08, 09 or 2020 even, because we've had a crazy melt up in real estate and other asset classes like the S&P, the NASDAQ, right? I mean, this makes people more wealthy, at least on paper. But to your point, I feel the cost of living versus what someone makes in the States is insane. It's completely diverging. Like I know a lot of people in the medical field, right? So if you're a nurse, you're making 60 to 70K, right? US. You're getting 2 to 3% increases if you get outstanding results on your annual review. That's like what, $1,200. Oh, thanks for the extra $100 a month. Like, you're not going to get any. That's not sustainable when you have housekeeping going up triple post COVID. You've got landscaping going up double just to maintain a home. To be a homeowner costs so much money. It's
right. That 60% number might be a little high because if you own a house, you probably have some equity there. But if you don't, if you rent, all your savings is gone. That's kind of his point.
Agreed.
His point is that all your savings is gone, so you have no net wealth.
Right.
And then he's talking about negative net wealth, which is people that have debt. So if you have credit card debt, so even if you own a house, if you have debt on top of, you might have some equity there, but you have net negative because you have an auto payment, you have a car payment, and you might have a student loan payment, right? You add those three up and you're net negative. But his other point, which I think is pretty valid, is that 20% of the population is basically holding this economy up. you got the Mag 7 that's holding up the stock market. And everybody keeps saying we have double-digit earnings. We don't have double-digit earnings. The only people that have double-digit earnings is the Mag 7. Everybody else is sub-double digits.
Right.
Matter of fact, everybody else is like 5%. So we don't have double-digit earnings. It's total BS. So the stock market is illusionary, and the economy is illusionary, where you have 20%. Like you said, people are wealthy because the stock markets went up and the housings went up. They're basically pretty flush. We haven't had a significant drawdown since 2008. So people have been accumulating wealth, and they're kind of flush. So this top 20% is holding the whole thing up. And I think that the lower 80%, if you will, is going to pull it all down. And I've been saying this, that the trigger is going to be the tariffs, that eventually those tariffs are going to mothball into a recession and create some type of a Bear Stearns Lehman event, the black swan. I'm expecting it. And I go real negative. I go real dark. I basically believe that once the recession starts, it's not going to end. I don't think it's going to end. I don't think this is going to be a normal cycle. I think the bond market is in a doom loop already. And once this recession comes, it's going to basically slowly just deteriorate into a reset. It just feels like that's the time we're in right now. We've attempted to basically have an economy based on debt, dependent on foreign money. And now the foreign money says, we're not interested in helping you out anymore. And that to me is the crux of the whole thing, is the U.S. dependence on foreign money. Without the foreign money, we're doomed. And I think the doom loop's already started.
Yeah. So great analysis, Don. We share a lot of things in common there. I pointed out in our last podcast, and I'll point out something you just mentioned there about the Mag 7, right? So I haven't looked at as of July 31st how much they are in the typical tech ETF or even the S&P, but I would argue it's 30 to 40%, right? Because you're talking about 7 gigantic stocks. These are not 1% positions or 2% positions. They're much larger in any ETF these days that are larger cap in nature. And let's just call it 30%, right? I mean, our sector is 0.1%, literally. Like if you add up all the mining stocks, it does not add up to more than that in the global economy. And that is the opportunity, is that fund flows will go into our sector. You can see it after these earnings announcements, right? Newmont beat by 27 cents. Agnico on July 30, great quarter. Kinross July 30, great quarter. Who else just came out with Franco today was up on their earnings. Like there's all the big boys are showing you the path, right? It's that the average portfolio manager out there is not tasked right now with changing their behavior, because things keep melting up, right? But when it stops and the music stops and there's nowhere to sit, which I think is coming in sometime between September and November, early November, then you're going to see people shift into our sector or to value type sectors like ours, because growth is going to be out of favor.
I have one final comment. I think that somebody rang the bell on the mining stocks. And it was all last week, and I think it was the Friday before last week. So, and when I say ringing the bell, it was like, okay, the bull market in the gold and silver miners has started, and you better get on. And I was very bullish on my Friday recap. I said, you better get on the train now, because it's leaving the station very soon. And today's a good example of it. It's Monday. I think it's the 11th, August 11th. And today, gold and silver were both down, and the HUI was flat. We historically, we don't see that.
Oh yeah, we would see at least 2 to 3x downside.
Yeah, and all the leaders were flat. You had Agnico flat, Newmont flat, Hecla was down 5 cents.
Core was up, CDE.
Yeah,
a lot of the royalty companies were up in sympathy with Franco, like Sand was up. I mean, yeah, it's getting exciting.
Yeah. Somebody rang the bell. Any corrections are to be bought here. We only have one last thing to happen, and that's silver to get above 40. That's the last thing to happen. And we can see that it's going to happen. I mean, I don't see a scenario where it doesn't happen. So basically, you can see what's coming. You can see what's in front of us. It's you get above 40, and then you run to 50, and then from 50 you go to 100. I mean, it's ABC. That's what's in front of us. It'll take 24 to 36 months to play out, but that's the next 24 to 36 months. And like I said, someone rang the bell here, and the key to it all is the price action.
But
the price action tells it all.
Agreed. I will say that 37 to 50 would not take 24 to 36 months. This could take a few months.
Three.
Yeah, 3 months. There you go. I mean, look at the chart, guys. Go back to 1980. It's only happened twice that we touched that 49 to 50 range twice. I mean, you could see a springboard kind of move from 37 to the 50 area quickly. And as Don pointed out on our last podcast, that's not including inflation, adjusted numbers, right, Don? So like you're talking like 66 to 68 an ounce roughly was the target you had given.
That was 2011's all-time high was $68 adjusted. So 50 is a nothing burger. 50 is a nothing burger. 68's the all-time high. And so that's where we're going. We're going to 68. Now the question is, you get to 68, how long does it take you to go from 68 to 100? That could take a while. We don't know.
That could take a while. Yeah, but think about stocks like Triumph that just picked up a silver property in Utah, near infrastructure, with a past producing mine with 32 drill holes in it for 150 grand. Like that's why stocks like this are valuable, people. Is like you're getting access to a company that has silver exposure right now. Like, there's so many, and this is an exploration company, let's be clear. But there are so many small silver producers out there, or even mid-sized ones. Look at Core, for example, CDE. No one wanted this stock at $4. No one, and now it's at 11.70, and people are falling over themselves to go get some shares. This is what's coming. It's silver investors. I think John had mentioned are rabid. I forget the word he used, but that is the truth, right? Silver investors on the equity side are going to put money to work here. And maybe it'll be a little late, but you'll see some serious fund flows.
Okay. I'll stop talking.
Don, always a pleasure. We'll be back soon in a few days. And thanks to all our listeners for checking us out. Shameless plug, Don and I are speaking at Beaver Creek pretty much 1 month from today, September 9th. We're going to be speaking on opening day there, on stage live, doing this kind of back and forth. We hope you can join us at Beaver Creek, Colorado. If not, it should be aired probably a week or two after that. They'll tape it, and we appreciate your support. Thank you very much.